Welcome back to Investing Talk Podcast. Today, we're tackling a company that's, well, really a bit of a paradox, Atomera. Their technology could be a genuine game changer, but their current financials, they tell a very different story. So our mission for this deep dive is to unpack the question, is Atomera a good time to buy right now? We've sifted through, all the noise, pulling out the crucial insights and actionable takeaways you need to understand this fascinating yet, let's face it, complex investment. And hey, if you find this deep dive valuable, please remember to subscribe, like, and maybe leave a comment. And if you'd like to support our work, you could consider buying us a coffee. Your engagement really helps us continue bringing you these in-depth analyses.
Okay, let's try and unpack this investment puzzle then. We're focusing on Atomera, right? A company specializing in semiconductor technologies. What exactly is their core innovation? And why should anyone even care about a company with such, frankly, tiny revenue numbers?
Yeah, that's the core question, isn't it? The unique differentiator here is Atomera's mirrors silicon technology. You can think of it as a sort of breakthrough way to enhance silicon's performance right down at the atomic level. It essentially allows chip makers to make existing silicon chips faster, more powerful, more energy efficient, and crucially, without needing entirely new, really expensive manufacturing processes.
Okay, that sounds important.
It is. It's crucial for next-generation devices. Think 5G, AI, the Internet of Things. So, yes, while their revenue is small now, the potential for this foundational technology to be licensed across the massive semiconductor industry, well, that's what puts them on the radar.
Right, that potential. Sounds like a powerful long-term play,
Yeah.
potentially. But let's bring it back to the present for a moment. We always start with the financial fundamentals. What do the numbers actually tell us about Atomera's current revenue and profitability?
Well, the numbers tell a challenging story. Let's be direct. Atomera's revenue in 2024, it dropped to just $135,000.
Wow, just $135K.
Yeah, and that's a substantial 75.45% decrease from the previous year, a huge drop. They also reported a net loss of $18.44 million. Now, that was a slight improvement from 2023, but still, it's a significant loss.
So it's not just a bad quarter.
No, exactly. It's more like a flashing red light for an innovative tech company that really relies on licensing its tech. It suggests a fundamental struggle, in getting their groundbreaking technology adopted or monetized at scale. This gap, this tension between their technical promise and the financial reality, that's one of the core things we're exploring today.
Okay, so given those really tough revenue numbers and the ongoing losses, what does this mean for their long-term sustainability, especially when we look at their debt and cash flow situation?
It's certainly a critical point to consider. Now, on the positive side, Atomera has virtually no debt.
Oh, that's good.
Yeah, that's pretty rare for a development stage company like this, and it does provide some stability. However, the lack of substantial cash flow from operations is a significant challenge, a really big one. They're effectively burning through capital just to keep the lights on and continue their R&D.
Right, so they need money coming in from somewhere else.
Exactly. It means they're dependent on securing additional financing or, striking those significant licensing deals we talked about just to ensure long-term sustainability. Without that, even a debt-free balance sheet can become, well, pretty precarious over time.
Yeah, that financial picture certainly raises some serious questions about their longevity, especially with that limited cash flow. But sometimes a company story isn't fully told just by the raw numbers alone, right? Let's dig into how the market perceives Atomera's value, maybe beyond the income statement. How does it stack up with common valuation metrics?
Absolutely. And this is where it gets interesting again. When a company like Atomera is losing money, its price-to-earnings ratio, the PE ratio, well, it isn't applicable. Can't calculate it.
Right, negative earnings.
Exactly. So we often turn to price-to-sales, or PS. Now, Atomera's PS ratio, with a market cap around $153 million, and that tiny trailing revenue of just $121,000, it is astronomically high. We're talking over 1,200 times revenue.
1,200 times. Wow. Okay, put that in perspective for us.
Well, a robust growing tech company might have a PS of maybe 5 to 10, maybe a bit higher sometimes, but...
Okay, so 1,200 is way out there.
Way out there. It signals that investors are betting almost entirely on massive future success and adoption, not on current performance at all. It makes it highly speculative. And traditional methods like, say, discounted cash flow, DCF analysis, they're also very difficult to apply here. There just aren't consistent cash flows to project into the future. It really underlines the challenge of valuing this kind of nascent technology company using standard tools.
That PS ratio really hammers home the speculative nature, doesn't it? Okay, let's shift gears then. Technical analysis. What has Atomera's recent stock price action been like? What do the charts, the indicators suggest about where it might be headed in the short term?
Well, one of the, I guess, compelling aspects is that the stock price did surge. It jumped 12.12% back on April 8th, 2025.
Okay, what happened then?
That was directly after they participated in the RF Workshop 2025. So it shows that positive news, even just something like a conference appearance, can have an immediate, sharp impact. However, if you look at the broader picture, the overall trend has been quite volatile, lots of ups and downs. And there have been more down days than up days recently, which generally indicates uncertainty in the market.
Okay, and what about those common technical indicators? The 50-day simple moving average, the SMA, that's a key one for short-term trends. What does it mean when the stock is trading below that average like it seems to be now? And the relative strength index, the RSI, which measures momentum. You said it's around 46.97. How significant is that slightly bearish signal for someone looking to buy?
Right. So when the stock is consistently trading below its 50-day simple moving average, it often signals a loss of that short-term momentum. It suggests that sellers might be more in control, and the path of least resistance could be, well, downwards, at least for now. And an RSI below 50, especially if it's sort of trending lower towards 30, implies weakening buying pressure.
So not oversold yet, but not strong either.
Exactly. It's not flashing a strong buy signal based on being oversold, but it definitely tells us the stock isn't attracting really strong interest or upward momentum right now. So these indicators, they kind of reinforce that idea of volatility and short-term weakness, despite any quick bounces you might see on news.
Okay, here's where it gets really interesting and maybe a bit contradictory, actually. We've just painted this picture of financial struggles, technical weakness in the short term. Yet, what's been happening with Atomera in the news? And what's the general sentiment, particularly from analysts who follow the stock?
Yeah, this is the contradiction we really need to unpack. So, notable recent news, well, it includes their participation in that RF workshop we mentioned, and they have an upcoming annual general meeting. These are generally seen as positive, opportunities for the company to engage with the market. But the big headline here, the thing that stands out, is that analysts rate Atomera as a strong buy.
The strong buy. Really?
Yes, a strong buy, with an average target price of $7. Now, that suggests considerable optimism about its future prospects, which is, as you said, in stark contrast to the current financials we just discussed.
That's a huge disconnect. I mean, how can analysts be so bullish when the company's financials look so tough right now? What are they seeing that maybe the raw numbers don't show?
Well, they're likely looking almost entirely at the intellectual property, that mere silicon technology we discussed. They're focused on the potential for very large, high-margin licensing deals down the line. It's a bet on future adoption by major chip manufacturers.
So it's all about the future potential of the tech itself.
Pretty much. And the potential long-term impact of their technology in this constantly evolving semiconductor landscape. It's really a classic high-risk, high-reward scenario. The perceived future value far outweighs the current, very challenging financial reality. The analysts are basically forecasting a significant inflection point sometime in the future, even if the exact timeline is, well, uncertain.
Right, that makes sense in context. Speaking of the future, what potential catalysts are actually on the horizon? Things that could significantly impact Atomera's stock performance, maybe bridge that gap.
Okay, the most immediate one is the upcoming earnings report. That's scheduled for July 29, 2025. That's a major one. It could significantly impact the stock either way, depending on whether it meets the market's expectations or maybe even those bullish analysts' expectations.
Okay, earnings are always key. Anything else?
Beyond that, continued innovation in their semiconductor technology. Maybe news of a breakthrough or perhaps signing a significant new product development deal with a major partner. That kind of news could serve as a powerful future growth catalyst, something that finally starts translating that potential into tangible revenue. That's what everyone's waiting for.
Okay. Now, every investment, especially one as, well, speculative as Atomera seems to be, carries risks. What are the key risk factors you should be aware of if you're considering this stock?
Yeah, absolutely critical to talk about risk. We see several layers here. First, there are stock-specific risks. That includes their persistently low revenue and profitability, which we've covered quite a bit, along with the very high stock volatility. Price swings can be sharp.
Okay, stock-specific.
Well, then there are sector-specific risks. The semiconductor industry is intensely competitive, lots of big players. And Atomera's success really hinges entirely on the broad adoption of their specific technology, that mere silicon technology. That's a pretty big if. It's not guaranteed.
Right, adoption risk is huge.
Exactly. And finally, we always have macroeconomic risks. Broader global economic conditions could dampen overall technology demand, and that could affect even potentially groundbreaking innovations. So putting this all into context, it really underscores why a comprehensive risk assessment is absolutely vital before you make any moves here.
Okay, so bringing it all together then, for you, our listener, maybe you're considering whether now is a good time to buy Atomera. What's the bottom line? How do all these conflicting factors, the tech promise, the bad financials, the analyst view, how do they weigh against each other?
Well, when we balance that immense technological promise and the strong analyst confidence against the frankly severe financial challenges and the market volatility, the overall rating for Editomer comes in at a 6 out of 10.
A 6 out of 10. Okay, what does that imply?
It indicates a medium to high risk profile, definitely, but importantly, with substantial potential upside if, and it's a big if, their technology achieves that widespread adoption we talked about. For those looking to potentially enter, perhaps feeling optimistic about the tech, the suggested best entry price range is probably around $4.50 to $5.50.
Right. And what kind of investment strategy is best suited for a stock like Atomera? I mean, is this for everyone?
Oh, definitely not for everyone. Atomera is generally much better suited for long-term investors. They're the ones who can, stomach the current volatility and really believe in the company's innovation and the analyst optimism over an extended period. Years, potentially.
And short-term traders?
Short-term traders might find very quick opportunities, maybe around significant news events like earnings or partnership announcements, but they need to be extremely cautious. Given the stock's high volatility and the speed at which it can move up or down, it requires careful management.
Okay, makes sense. So for those considering a trade, maybe with that higher risk tolerance, are there any optional trading guidance points, given that risk profile?
Yes, there are some general guidelines. For those with that higher risk tolerance and a shorter time horizon, the guidance typically suggests placing a stop loss, maybe around 10% below your entry price. That is absolutely crucial for managing the inherent risks of such a volatile stock. You need that protection.
Okay, a stop loss is key. What about taking profits?
For a take profit target, well, you might aim for something like a 20–30% gain, or perhaps when or if the stock reaches that average analyst target price of $7. These guidelines, they're really there just to help manage the downside and potentially lock in some gains in what is, by pretty much all accounts, a speculative play on future technology adoption.
Okay, that wraps up our deep dive into Atomera. We've seen a company with significant innovative potential in a fiercely competitive industry, but also facing very real, very current financial challenges. It's definitely a complex picture with that high analyst optimism balanced against the current metrics.
It really is. Atomera presents that classic dilemma for investors, doesn't it? How do you truly weigh the promise of future technological innovation and that strong analyst sentiment against the stark current financial performance and significant market volatility? It's just a powerful reminder, I think, that truly understanding an investment requires looking at all the angles, not just the glossy projections, not just the raw numbers, but how they intersect and what the risks really are. So keep digging, keep learning, and keep asking the right questions, because that's really where the genuine insights lie.